We would like to alert our viewers that the popular video sharing app TikTok is currently unavailable for users in the US. The popular video app stopped working shortly after signaling to users that it might go offline with a federal law barring US companies from hosting or distributing TikTok. And a message appeared on the app for US users which said a law banning TikTok has now been enacted. And the message on the phones read, "You cannot use TikTok for now." That's the alert coming in at this point of time. Moving on to other business stories, getting you the latest on the global economy, where divergence, uncertainty and resilience are shaping the landscape in 2025. From the bustling streets of New York to the vibrant markets of India, the global growth story is anything but uniform. So let's break it down for you. Now, the IMF predicts global growth at 3.3% in both 2025 and 2026, steady, but below the historical norm of 3.7%. Inflation is cooling across much of the world, yet persistent pressures and policy uncertainties keep the recovery fragile. Regions are treading very different economic paths, and the stakes could not be higher. The US economy continues to defy expectations with predicted growth of 2.7% in 2025, leading advanced economies. The engines: strong consumer demand, a strong labor market, and favorable financial conditions. However, inflation remains stubborn, likely to hover just above the Federal Reserve's 2% target. On Wall Street, optimism runs high with record-breaking equity markets buoyed by hopes of deregulation and potential tax cuts. But looming risks like trade frictions and geopolitical tensions could test this resilience. In the East now, China faces a tougher climb. Growth is forecast at 4.6% in 2025, a slight improvement but still subdued by weak consumer confidence and a sluggish property market. Fiscal stimulus offers a lifeline, but heightened trade policy uncertainty and domestic structural challenges weigh heavily. While disinflation is helping to stabilize the economy, long-term concerns remain. Meanwhile, India emerges as the star performer of the global economy, holding steady at a strong 6.5% growth rate. A mix of strong domestic demand, consumption-driven resilience, and steady policy reforms, it drives this momentum. Challenges in industrial output persist, but India's growth outlook remains solid, marking it as a key driver of the global economy. The Eurozone, however, continues to tread water, with growth predicted at a modest 1.0% in 2025. Weak manufacturing, sluggish exports, and political uncertainty in Germany weigh on the region's recovery. Inflation is expected to converge to the European Central Bank's 2% target at a slower pace, leaving policymakers walking a tightrope between stimulus and stability. Still, a pickup in domestic consumption offers a glimmer of hope. Globally, financial markets are reflecting these diverging economic narratives. And the US powers ahead and India shines bright. China works to regain momentum and Europe struggles to find its footing with tensions and market uncertainties ever present. The road ahead is anything but smooth.